Yo, what's up? It's J2O, man. You already know we out here for another episode 10 of my podcast titled Is the Virus Affecting the Markets in April? It's a question people want to know for the month of April. Is the virus affecting the markets? And the answer to that is absolutely. Yes, the virus affected markets still. Yes, we're still practicing social distancing still. There's still a lot of uncertainties. Some companies are not doing well, or small businesses are not doing well because they can't generate sales, and you got rents coming up from these companies like Cheesecake Factory. They can't pay their rent for like April 1st, so they're out here struggling. Their stocks going down. Other companies' stocks took a huge hit. So right now, the virus is still affecting the markets. So as you can see, right now, many people think about, oh, when's the best time to buy stocks? Right now, say hold out for a few more weeks, because I know it's still dropping, and there's going to be a lot of discount opportunities. Because stocks should rise up when this whole social distancing ends, and when businesses are able to go back to like full force, and people start to get their jobs back. 'Cause a lot of people thought unemployment. The unemployment rate like increased to like 4.4, I believe, for like non-farm payroll that happened yesterday. So many Americans filed unemployment at a high rate. So many people are needed assistance at a higher rate because jobs can't pay the employees, so therefore employees can get laid off. So this virus is causing so much uncertainties. And right now, are we close to find a way to improve this? Only time will tell. But right now, it's not looking good. And yes, it's creating opportunities for people to eventually get in stocks, but also it's creating panic for the people that are looking to retire. Because many of their stocks went down, the portfolios, many of them survived the '08 crash. And now we have this like crash right now kind of happening where it's a lot of uncertainties. So I feel for the older generation. So right now they're out here trying to figure it out. Like, oh snap, what we about to do? Trying to retire in a few years. Do I close out all my stocks now, or do I hold off and wait for it to go back up? But right now, it's crazy times, you know. But there's also with crazy times, crazy opportunities. So we're gonna have more new millionaires to come who could take advantage of these opportunities, whether it's like trading forex or stocks, looking to buy a lot of shares that they normally couldn't afford to buy at a higher rate because share prices are expensive over time. So it might create new opportunities for new people to like invest in and be able to hold shares for maybe 5 to 10 years or longer. But I feel like every like 10 or 15 years, something crazy happens in the market. So I wouldn't ever hold shares past 10-year mark for sure because there's so much uncertainties in the market. And it's also affecting like world news. So if you trade forex market, you understand there's different currencies, the different news reports that are released, and this virus, it's affecting the markets. So affecting like manufacturing business, affecting different industries. There's new countries. Well, there's countries making reports that supposed to like push the market. That's not really creating a lot of movement. Cause this past farm payroll that happened like 2 months in a row hasn't been a lot of crazy movements. Even there's a lot of crazy things happening in the economy. So I feel like the whole markets right now is just funny. I know some people I talk to that trade stocks, um, they're like kind of don't like how the market is going, or my friends that are option traders, they don't like how the market is going with their strategy they use for the markets. So that's why this time you had to have multiple strategies as you trade or invest. What worked in certain market conditions might not work now. So you have to adjust your trading strategy or business strategy at this time like this. So it's always good to be proactive and look at this time as opportunity to work on a new skill set or take advantage of the situation. And what I recommend you traders do who trade forex is trade with caution. Make sure you have your stop losses. Make sure you understand your risks. You know, have a good idea of your risk management in certain trades and watch out for certain news events that could like sway the markets. So just trade with caution. And also, I would say trade bearish markets because I feel right now there's a lot of bearish markets going on because of the whole virus. So you had like gold dropping, you had Dow dropping. These are called bearish markets. Where it goes down is bearish, when it goes up is bullish. So that's what I mean by bearish and bullish. Right now, there's a lot of bearish markets. So a lot of sell opportunities, especially for swing traders that hold trade for days. They'll feel more confident holding trades because they know there's overall bearish markets. But overall, having good risk management, knowing your risk to reward ratio, whether it's 1 to 2 or 1 to 3 or 1 to 1, which I don't really look for one opportunities. Look for like 1 to 2 or higher. Understanding your risk management will help you survive and be profitable. So these are things you should do at this time. Trade with caution, trade bearish markets, and have good risk management. And if you want to know more info, just follow me on Facebook, facebook.com/JOBerenzi, and my YouTube channel, J2O, my Forex journey, or follow me on Twitter, J___smooth. But that's ways you can contact me to learn more about Forex. And that concludes this meeting. Ready? Know. Take care, y'all. Continue being cautious as you trade and stay focused.